What's up, everyone? It's Eric with Option Edge, and today I want to talk about how to roll out a call, a losing covered call, um, into out into time to collect a larger credit and to give you a second chance at becoming profitable. So I'm going to do a little case study using the trade desk, which after the stock split, I was able to get 100 shares, and I was pretty psyched about that because then at that point I could start at that point covering my stocks with some covered calls. So let me just do a little quick breakdown of how that went and what I did when I started to lose. So let's go over to Excel. I'll show you how things went. All right, here we are on Excel right now, and not to be. I hope this doesn't get monotonous, but this is how things went. On August, I started selling the $100 strike for 60 credit, closed for bought to close for 20 cents. Here was my profit, and you can see I sort of went along and did this throughout the summer. Then we got to the fall, and actually before I show that, so some of you'll notice that my strikes, I was actually rolling down in time, or excuse me, I was rolling my strike down, keeping the same expiration prices. So I start with 100, and I was rolling down three times, rolled down for a larger credit, and made almost like 150 bucks or 100 something dollars on that. Did the same thing with the August 27th expiration cycle, rolled down to receive a larger credit, and then would close out. And here, collect a bigger credit, close at about a half. So you get the idea. So then we come to where I bought, or I sold, excuse me, the $85 strike for $1.05. Opened that in October with an expiry in November. Okay, I ended up closing this. Okay, a month later for a $830 loss. So in the past, this has happened to me. I've tried to do this with some of my growth stocks, which I don't suggest doing this with very these high beta growth names because they can rip to the upside. But right now in a bear market like we're in now, selling some calls helps to it just helps. Okay, you can make some income as your stock falls. But with that said, I got hosed on this one, and the old me didn't realize you could actually roll these calls out in time and pick up a larger credit, and sort of try and delay your loss. And that's sort of what we did here. So we closed for an $830 loss, right? But we came back. So we bought to close for $9.40. Okay, we came back and rolled out to the January 21st expiry and collected a credit of $10.10. Okay, so that's about 70 cents larger of a credit. Okay, so we rolled out in time. We went from the 85 strike to the 90 strike. Okay, that's why I had to roll out. So not only did I roll out in time, but I rolled the strike up. Okay, to give myself a fighting chance. And then I got kicked in the butt again. Okay, had to close that for $14.30. Had to buy to close for that much. Okay, so we went back to the drawing board. I rolled up 15 strikes in 6 months out in time for a total credit of 15. Okay, $15. Okay, so we collected 70 cents more of a credit. Then that was open that then, and then about 2 months later, we closed this for a $970 gain after all of that. So close that for a credit of $5.30. And then finally, here's our last one. So that was the $105 strike. So I kept the same expiry but rolled down to get a bigger credit to the $95 strike. Okay. And now at this point, I'm trying to not only just roll down, I'm actually trying to uh, get the time less. Okay. So I rolled down. So here, I did this today or yesterday where I closed out for $4.55. I rolled the strike down $5 and a month earlier, okay, which is hard to do. It's hard to collect a larger credit when you roll. It's hard to it's hard to collect a larger credit. Usually, you'd expect you'd have to roll the strikes a couple more widths down. Besides, just this is just a $5 width here, but we were able to collect a larger credit on that. So it just shows you the old me used to try and do this with these growth stocks, and when I would lose, I would just take the loss. Okay, I wouldn't roll out in time. I didn't realize there was still another chance, and this worked out because right now we just hit this bear market. Had I if had this been maybe earlier where the trade desk was absolutely ripping, I could get myself into a predicament where I'm just rolling infinitely out in time. But this one we were able to hold on, fight, and right now let's just see. So I'm up $350, $355. So I mean, it's a lot of action for just not too much of a gain. But I'm just showing you how. I just wish I knew about this because beforehand, like I said, I would just take my loss like a jerk and wouldn't try to fight back. Okay, so just remember, there's always a fighting chance. That's sort of what's awesome about options. Yeah, so that's it. Hope you enjoyed that. Peace out, and like and subscribe. Peace out.